Good day, traders. This is Mdlalose with another daily Forex update. Today, I'm just going to talk about something that is very important that a lot of traders don't really consider important, but it is, which is the trend. Yes, I know a lot of people. I've seen in different platforms, in different forums, people trying to catch falling knives, people trying to predict this will happen and what. Remember, the overbought and the oversold areas, they give you an idea where the markets could possibly reverse, but it does not guarantee that the markets will reverse there. That's why it's very important to understand how you should act when the market reaches the overbought and the oversold areas. Yes, very important. But I just want to talk about the trend, because a lot of people sometimes they focus too much on the overbought and the oversold, and then they end up getting caught in wrong trades and blow their accounts. Okay, so before I go ahead, if it's your first time watching my video, make sure you subscribe and hit the bell notification button so that every single day when I release a video, you can learn very valuable trading tips, because yeah, my content is worth it. Yeah. Okay, so now I'm going to be talking about one of my favorite pairs, which is the euro. Okay, which is euro yen specifically. I love euro yen because when it moves, it actually gives you a good pips. So it's one of the trades that I actually took today. The only sad part about euro yen is it hardly moves, but when it moves, it actually gives you nice and smooth moves. So that's very important not to focus on it as the only pair. That's why I trade euro together with the GBP pairs. Yes, I do trade other pairs as well, but my main focus is on euro and GBP pairs only. So today I'm going to be talking about the trend. Yes, trend. We've seen this saying online, trade with the trend because the trend is your friend. And I think, honestly speaking, about 9 years ago when I started trading, it's one of the first things that I actually heard or actually read on books, that you need to trade with the trend. You need to trade with the trend. But all these years, I have struggled to actually get someone who teaches me how to trade with the trend correctly. So when I discovered better ways to trade with the trend, that's when I started seeing my success. That's why I also decided to do this video today, so that you can understand the trend. So when you're looking at the markets, the most important thing is the trend. I know this video might get people saying, Sunny, that why are you using moving averages? They are slow, they lag behind the price. I'm a price action trader. Have you ever heard those type of traders that says, I'm a price action trader, I don't use any indicators, I don't use anything, I just look at the price and then I just look at them. I'm like, okay, good for you if that is making you money. But when you are trading, you need a reference point. Okay, you need a reference point. What I mean is you need a line in the sand. Very important for you to understand. What do I mean when I say you need a line in the sand? When you open your charts, you need to have an idea whether you are going to be a buyer or a seller. That's very important, because if you don't have that information, you are bound to actually be in wrong trades and lose money, because you don't know whether you are actually in the right trade or not. So it's very important for you to understand whether you want to be a buyer or you want to be a seller. Okay, so my main time frame that I use, it's 15, it's 5 and 15. Yes, those are my main time frames that I use, but more than anything else, I use the 15 because I find it much cooler, because it doesn't move that fast like the 5-minute chart. It gives me time to think, because when I trade, I take a trade on the 15-minute bar close. My trades just last for about, looking at trades, it's roughly 2 minutes, then I'm done. I close my platform and I come back after 15 minutes to check the progress of my trade. If there's nothing and everything is still intact, I close my platform as well, and then again in the next 15 minutes I open it to check what is happening. So on the 15-minute chart, I use the 40 EMA. It doesn't really matter. It can be exponential, simple, linear, weighted. On a serious note, I'm just using an exponential, so you can see my 40 moving average. That's what I use to actually have an idea whether I want to be a buyer or a seller right now. So if you ask me right now and say, Sunny, do you want to be buying or do you want to be selling euro yen? I'm looking for a buy, even though right now I'm a high probability trader. So when the markets have moved this much, 81 pips, or from the daily low to the daily high, the market has moved roughly 118 pips. Yeah, I'm done. Really, I won't be looking for any long trades, because to me, we might have a reversal. It might go another 100 pips. I don't care for that matter, because I've made my money for the day, and even if I don't get any trade from now, I'm okay. But let's actually go back and look at the moving average, and down here you can clearly see I always have my strength meter and my volume indicator to actually guide me and tell me, yeah, things are hitting up or what is happening. So again, 40 EMA, that is where I focus on. I need to make sure that the price is above this moving average, okay? Because when the price is above the moving average, right, it's a buyer's wealth. It's a buyer's wealth. You're only looking for buying, okay? You are not looking for selling. This is the line in the sand. This is your reference point. This is where you have to identify whether you're going to be a buyer or a seller. It goes exactly here. The market crossed here, up here. You are now a buyer. I don't want to trade this reversal. I don't like trading this reversal. The market crosses, now it's trading below the EMA. Whatever settings that I look for on my strength meter is now selling a signal. So it's not that complicated, because the moving average does the calculation for you. I know there's one of the things that people do not know. Trading is math. Trading is maths, to be quite honest. I don't even want to go and start explaining why I'm saying it's maths. Maybe one day, you know what, I can explain the mathematics behind trading, you know, because trading is about probabilities. It's about a couple of things lining up in order for you to get a good trade. So when I trade, I've got a couple of checklists. What is the trend right now in relation to my moving average? If it's up, check, I'm looking for a buy. What is my strength meter doing? Is my strength meter, is the gradation good enough on my strength meter? Is the other one facing up and the other one facing down? If that's the case, then check. Like for example here, by the time I took this trade here, this euro yen was right above there. This had opened up, even though it came back down and struggled here again on the trend line. It really didn't start trading below. That's why I kept my trade, even though I did experience a little bit of hit, because my entry was here, right? My stop losses was here. My stop losses are strictly 50 pips, and it went against me only 28 pips, and then boom, it went my favor. I collected roughly around 68 pips on that euro yen trade, of which for me, collecting 68 pips on one trade, it's actually very, very good, because my target is only 50 pips. So if I go 18 pips above my target, I'm very, very pleased, because my success rate is roughly around 80 to 85%. Some days, you know what, I hit 100%, but the system success rate is around 85%, if not 90 some days, or 100% some days. But in general, it's about 85%. So if you look at the price in relation to the EMA, even if you didn't jump in here was also a good enough trade. The price pushes up above the 40 moving average here. Already you can come down here. Let me put in a vertical line to show you exactly what I mean. At this stage here, already the opening of that bar, you had the euro shooting up, you had the yen going down, you had the volume rising at the same time, you know. as I said, trading is math. You need to have that probability on your side in order for you to be actually making money. Because when you see the volume rising, strength meter diverting, price above the 40 moving average, giving you the trend, you know with high probability the market is about to go that way. If I go back to yesterday as well, its concept is exactly the same. We had a volume rising, price, where is the price in relation to the moving average? At the close of that bar, the price was above this moving average, which is the 40 EMA that I use for my 15-minute chart. And what was the strength meter doing? Strength meter yen is falling. You know what? Yesterday we didn't really have a euro strength. Basically, we had a yen weakness, but it was good enough for you to be in a trade. As you can clearly see, it was yen going down, euro was just like sort of like chilled, moving in a straight line. Previous days, I don't know if I can go back in terms of my strength meter, because I've only allowed it to look back of only 200 bars, so that it doesn't do a lot of calculation. Because if it looks back for like 1,000, it slows down the computer, and especially during the trading times, during news, your computer will literally freeze because of the calculations done by the currency strength meter. I know a lot of people have been asking me about the current strength meter that I use. I use the CCFP with the setting 612, yes, 612 settings. And if you click on if you check on this particular video, there is a link below where you can go and download this indicator for absolutely free. Yes, don't worry about the name change or whatever. It's the same indicator, still the CCFP, and I've have it on the 5 and the 15 minute. But I have to say, when I trade, I look at my strength meter on the 5-minute chart. I don't look at my strength meter on the 15. I look at my strength meter on the 5, because I want to see early when the market starts diverting, or also when the market start crossing, and yeah, I'm mainly looking at the 5-minute. That's why even that particular trade that I made money, I had taken it here. You can clearly see at this particular point here, euro was going up, yen was going down, even though it did retrace a little bit. And on the 5-minute chart, I don't really trade the 5, so it came back below the 5-minute the 40 EMA, and then it shoot back up, and then you could have potentially taken it here at the close of this bar on the 5-minute when it had crossed. Also, strength meter, another thing is you can just use the simple crosses to actually take a trade. I think that's going to be one of my next video, of actually identifying the currency crosses in order to know whether you want to be a buyer or you want to be a seller. So the lesson for today is pretty simple, right? Make sure that you use a moving average of your choice. Okay, right, let me touch on the moving average so that other people will have an idea why I use a 40. Okay, so if we go and look at let's go and look at the calculator. I just left the 40, but I'll just explain my thinking process why a 40 moving average. So a 4-hour is 240 minutes, and then I divide it by 5 minutes, which is your 15, which is your 15-minute chart, and then you can clearly see I get a 16 moving average, right? It gets in 15, goes into 240 about 16 times, right? But for me, I don't want to use a 16 moving average because it's a little bit fast. So that's why I use a 40. But 16 still, it's good enough. It can keep you in trades. And yeah, my personal favorite is actually the 40 because it's a little bit slower than the 16. But you can alternatively use the 16 here. Okay, and it will hack the price a little bit better than the than the 40 part. You can clearly see you'll get those fake outs above, below, and you know what, I don't want you to be taking a wrong trade, because this one is a little bit faster. So for me, I settle with the slower moving average, which is a 40 moving average. I mean, at some stage I used to use a 48, but 40 for me, it does it for me. I just focus on the 40 on the 15 and look at the price in relation to the 40, and then also look at the other goodies as well, in terms of your strength meter and your volume, whether they are agreeing with that particular trade. So you can clearly see that's the trade that I took. I actually took other trades as well. I also took euro dollar as well, and I'm also out. You can clearly see this is where I entered on the euro, on this bar right here, and I exited up there, and I'm also done also on that particular trade. So these two trades only. This one gave me about 44 pips plus 68 on the other one. You can clearly see that just for these two trades only, I netted more than 100 pips, and in the morning I also collected a few pips from GBP, which is currently not behaving for the day. But simple, have your key reference area, right, where you will need to make sure that you identify whether you want to be a buyer or a seller in terms of your moving average. So if I can put it on a GBP just before I close off this video, is the same thing, your 40 moving average, which is what I used on my GBP. This is my GBP trade this morning. I took it here. I closed here with around about I think 6 pips, because the strength was falling, and then when it crossed up here and closed above, and then I took it here and I closed right there with around about 13 pips. So I took 2 trades on GBP USD, this short and that long, and currently you can clearly see this is what is happening. So if I was interested in any trades, I'll be looking for short trades on GBP USD, but depending on the strength meter as well, what is happening on the strength meter. If I can just quickly check what the strength meter is doing as I'm speaking to you right now. You can clearly see the strength meter. I don't like it. I don't like it. I don't like it. I don't like it. Because yeah, it's crossing, but both of them, they are not closer to the zero line, and both of them are below the zero line. So there's also other techniques that I use. If you want to understand the zero line concept, kindly make sure that you watch my previous video. I actually posted a video on how to trade the strength meter using the zero line. So it's very, very important, if you're done with this video, to go check out the video that I just did, I think it's day before yesterday, on using the zero line to actually trade. Even though, yeah, dollar is rising, GBP is falling, but you can clearly see they're both below my zero line, and they are both below the zero line, signifying that for today they are both not the strongest or the weakest. So it's actually nonsense. So when you get a good trade, you need something like that. You see, these are next to the zero line. This just shot above the zero line. You got a good trade above your 40 EMA. Here's another trade here. In fact, around about here, not even there. GBP above the zero line going up, dollar below the zero line going down, and you get a trade in that way. But yeah, as I always say, guys, subscribe, make sure you share my videos. Mdlalose, stay blessed. Goodbye.